to next with your business? What's the next, the word that gets bandied around here? Please have a seat.
I think, eye care, although I think it's very important. I operated on 5 patients this morning. That's what I do every day. It's a very still part of healthcare, actually. Like, I think about a third or almost a half of the patients that come to Tygerberg on a weekend actually are orthopedic patients, people who've got broken bones and things like that. Cardiac problems are very common, hypertension, diabetes, HIV. And so we've just teamed up with as many specialists as we could. So last weekend we said rather than focusing just on eyes, we're going to go big. So we won the African Entrepreneurship Award, whatever.
Or whatever. Modest guy.
We got some dollars, which means more and more every day. It's cool. We don't want them to pay us until next year. But anyway, but basically that enabled us to roll out massively across the specialities. So rather than just doing eye care in Tygerberg and Uteruscure and at New Zealand, we're going to be in KZN for eyes. We're already in Eastern Cape for eyes. But once you just get a foot in the door there, all the other specialists came to us. So last weekend, we were the head of department from cardiology, orthopedics, dermatology, all these other guys, coming to us on a weekend and paying to be on our system. So, we're quite happy with that at the moment. Yeah.
Okay. Dave, GetBucks is an interesting story, and I couldn't do it justice, but do you feel a similar resonance in terms of once you get a foot in the door, the business comes towards you, or do you think that the financial services space was a lot more difficult to crack and work in?
No, I think you're right, Graham. It goes a lot further than that. Your critical mass just comes. You've got to get there. You've got to just keep innovating, and it's just slowly but builds momentum. It's definitely not easy, but you've got to just execute. You just got to get out there and execute. And I think that's a lot of the problem with a lot of the startups, is the guys are scared to start because you could actually analyze yourself out of starting any business. If you spend enough time in the room with yourself, you just won't even start. So you've actually just got to take that first step, and actually that 1+1 example, your ideas get ideas. And dealing with your customers and innovating from the customer-centric discussion, as we had earlier, you just develop. And then you just get more and more customers, and customers talk to customers, and then it gets a life of its own. And yours is a good example.
Brett, you and I struggled to have a conversation because cell phone signal. Please, if you guys can come up with a solution for that in dead spots, I'm interested. We were talking about Zoona, and you said to me, "Oh, it just kicked off in Zambia." I said, "Why Zambia?" You said, "We were brothers born in Zambia." You learned a lot. Can you just share a little bit about the Zoona story and also the financing of Zoona? Because I think it's a great example that kind of encapsulates what we've talked about, some of the pain points for entrepreneurs.
Yeah, so I think from our side, two Zambian brothers who started a company in Zambia. My brother Brad was there. I was actually based down in Cape Town. We'd kind of played a lot in the vending of airtime via SMS and that side of things. And at one stage, we had done some business in Bangladesh. We had done some stuff in Malawi. And we actually, right in the beginning, got some funding from USAID to look at trying to pay rural cotton farmers electronically. Probably the holy grail in terms of our industry. So we didn't quite crack that nut. But originally, funding from USAID. We then got some debt funding out of the States. We got a bit of grant funding due to this kind of social connection of the business. And then I think about 3 years ago, we closed a Series A investment round with one fund in San Francisco called the Omidio Network and a Washington-based fund called Axion Frontiers. I think our journey and kind of what we learned as we went along was absolutely number one is like hit whatever numbers you're going to say. Like as you start engaging with investors, do not miss your numbers. I think the other one is engage early because it's a long journey. So don't kind of think that you chat to them and within a month you've got a deal done. I think for us, we actually started engaging. We were looking to try and raise money. And 3 weeks later, our core revenue stream, which was a voucher program we were doing with the World Food Programme, basically got cancelled. So we had started our journey, and our core revenue channel that our whole model was built on was absolutely canned. And in hindsight, that was probably our best way of raising money because we were able to go back to the investment community and say, you know what, this model we've put there is a lot of rubbish, but we're going to disappear. We're going to go run our business, and we're going to come back to you in 6 months' time. And we were able to come back in 6 months' time, having hit the numbers we had presented, but with a totally different model. So I think that was probably like going similar to the point of you don't know what you're going to do. You've got an idea, but when you hit bad times, you might need to reroute to another idea. But if you're trying to raise money, just make sure you hit those numbers. Otherwise, you're going to have a difficult time trying to convince people. I think just where we raise money, I think strange enough for us, we didn't even look in South Africa. We're now kind of starting to look at a Series B round, and we're starting to chat to some funds in SA. But to be honest, like the reality is, you've got to go to places where the right valuations are, the right metrics of how they value kind of startup businesses are. And that money is not in this country. And if you're looking in this country, personally, I think you're probably making a mistake or are going to end up with money on the wrong terms and without the right exit strategy for a growth business.
Silence. I don't want to be the only one firing questions, but I do just want to get Patrick's view. Crowdfunding platforms as a future for small business. What do you think the future holds?
Yes, there's been a number of comments from a number of speakers this evening talking about how there's not much deal flow down the line because a lot of the quality of the people who are going to the accelerator program and stuff are not ready for them. What that means is that you're not getting good funneling mechanisms early on. So you're getting a lot of organizations coming through or new startups that aren't actually of the quality that they're going to become successful businesses. Right. So you need that vetting system right at the start. You need 1,000 bubbles, 1,000 new little organizations getting out there to funnel down to the 100 that'll go into the accelerated programs that'll come down to the 10. That's where crowdfunding comes in. And what it allows is, the traditional model is you have a loan manager or a VC guy who's sitting there analyzing your figures and stuff and deciding whether you're investable or not. Crowdfunding flips it around and instead says, look, we've all seen Dragon's Den. Dragon's Den, you get a bunch of people here with a pile of money, they decide whether you as the entrepreneur are going to be worthwhile. They sit there, you beg, you plead, they give you half for what you've asked for double what you offered. Well, they're wrong more than 50% of the time. So why the hell would you ask someone who's actually going to get it wrong more than 50% of the time? That's why they charge so much. Yeah. Crowdfunding, it's true. Crowdfunding says, look, you four guys actually really don't know what you're talking about. Let me turn my chair around and ask the crowd, because those are my customers. That is the power of it. And that's, in the same way Uber and all those guys, it's actually saying we're going to skip over the potential investor and go directly to the customer. Doesn't work for everything, but it's a very, very powerful way to crowdsource the vetting process in itself. Mm-hmm. Crowdfunding is a test and vetting mechanism, and how powerful it is we do crowdfunding in a rewards-based system, where people give you cash, you give them a product in return. But when you look at equity and debt-based crowdfunding or peer-to-peer lending, that's where you start seeing some very interesting stuff happening. And if you look at guys like Crowdcube and Seeders in the UK, more and more angel investors are stepping back and saying, look, we're going to use the power of the crowd to vet or gauge whether this is a worthwhile investment before we jump in. So they'll do things where they say, like, okay, a whole bunch of companies are going to crowdfund on an equity platform. Anyone who goes over 60% in terms of their ask will then jump in and take the remaining 40%. So it massively de-risks the potential, de-risks the investment opportunity by using the power of a whole bunch of people looking at an idea and seeing whether it's worthwhile.
And Martijn, this was partly your point about the power of communications and networks taking us forward into the future, right? Exactly. The ability of all of us to be vetting and becoming decision makers, including investment.
Yeah.
I really think that for a lot of things you want to achieve, you don't need money anymore. So I need. I heard the word crowdfunding more and more, but I think with crowdfunding you get money. With money you buy stuff that you could get free. It's called crowdsourcing, and I think we will transform from organizations to organizations to networks. But after networks we get swarms. And actually it's Facebook social swarm intelligence and social swarm technology. And if you use that properly, you don't need money anymore.
For those of you who don't know what Martijn's talking about, tackle him afterwards. He'll definitely give you something for nothing. Questions, comments? Again, I'm really blown away by the time and energy that all of you have offered, and so many great entrepreneurs have given of their time. Brett?
No, I was just going to say on the crowd funding side, I mean, we have a partner called Kiva. I don't know if any of you are aware of it, but so we have what we call our emerging entrepreneurs, which are our branches in Zambia. We think branches is a pretty dull banking term. But so we call these are emerging entrepreneurs who act as our branches, and I think they do create the absolute key link in our ecosystem, which is that relationship, which Paul spoke about, which I think is so key. But what we've been able to do is through our partnership with Kiva is obviously get profiles, get them onto their site, and basically raise money through that. What's interesting is I suppose there's raising money through presenting an opportunity, or raising money through a social component, which is where we are able to raise debt without anybody even expecting a return. We get money at zero cost, and we're able to basically use that as working capital to get these businesses up and running. So I think as you look at it, both actually even on the investment side, I think for us, if you look at the funds we've raised from, they're social impact funds. Yes, they're for-profit funds, but they've got that social impact. And being based in Africa and the economies, I suppose we're not allowed to use that word anymore, but in the markets we play in, there is a lot of social impact that you can have with your business, but both on the kind of crowd side as well as your own kind of business investment raises.
Yeah. And on that note, what Martijn was saying just now, when you talk about the future of money, the value people look to generate more and more now is beyond cash. And what I mean by that is cash. I don't believe cash is going to disappear in the next couple of years. Maybe in the future, but not in the next couple of years. But what people see in return of their value is they're saying, I want it part cash, part return, which makes me feel good, or part return that makes me actually have social standing within society. That is their value proposition return. So what you're seeing more and more is in terms of social capital being raised, is that the return is not interest. The return is social standing or a feel-good factor that comes through.
And access. Social capital
and access.
And the network age is all about access.
Yeah. When you spoke about the Barclays kind of Barclays card to the world, my question is in return would be, do they use Facebook to access Barclays?
We're doing credit scoring modeling based on your social profile.
Yeah, and that's exactly...
That's the way of the future. So we're not going to look at your traditional way, what you've done historically. It's about who you are, where you engage, who you engage with, how you engage, when you live, how do you move, all that sort of stuff as well. So that absolutely.
Yeah.
That's
it.
Graham, I mean, I think that what we're missing is that in Africa there's still an access problem. I mean, what Brett's saying about his branches, kiosks, I mean, I've seen his branches and kiosks, and they're very effective. Their branding's great, they're there, they're visible. And the point is you need a physical point of presence, because to a large extent, the internet accessibility in Africa is still a problem. So where we are analyzing the trends and the developing financial and technological trends, a lot of it in Africa is still going to be held back by this access. Early on, Martin was talking about in 5 years we'll have all smartphones throughout Africa. That's great. 5 years is still a long time. In the meantime, a lot of those people still don't have access. Internet doesn't work that well. You're dealing with old generation cell phones. You're dealing with USSD portals rather than smartphone technology.
Yeah.
So you've got a big issue in terms of that. So you land up resorting to sort of a hybrid of traditional, wouldn't call it bricks and mortar, but a type of kiosk or branch infrastructure, as well as using technology. But something I just want to add is the regulator. I mean, it was brought up earlier on. Policymakers is the term, but let's be perfectly honest. The regulator, to a large extent, can play a very detrimental role rather than an empowering role. And in Africa, we've still got lots of governments that haven't even passed the electronic contracting acts. So we still sit with a country like Botswana, it's our neighbor. You know, they don't even have electronic contracting in Botswana. You can't go and accept the terms and conditions online. It doesn't happen in that country. So people get around it, they just take the risk, they do things, but theoretically the government isn't encouraging it. Namibia hasn't even passed the electronic contracting, and they're part of the common monetary area. So we sit with regulators that are not enabling. and then take it home just for a little bit. To a large extent, the banks, we got one of the best banking regulators in the world. But by the same token, why was M-Pesa so successful earlier on in Kenya rather than in South Africa? Because the regulator played more of a protective role. Now, we're not saying it must be free for all and everybody must just do what they want. But to a large extent, we must be very careful not to over-regulate. And already America is talking about regulating the fintech environment. Now, that's almost makes me nervous. The industry's just getting started and they're already saying, well, it's time for some fintech regulations. Now, can you imagine what kind of regulations are going to come up for the fintech environment? So this thing's just getting legs, but it can get hurt just as badly if regulators don't play with. I don't see the positive upside of working with it. And then banks, I mean, banks seems to be everyone likes to batter the banks around. But let's be perfectly honest, the banks are here to stay. So if you work for a bank, well, you're not going anywhere. Banks are not going anywhere. They'll be around long after we're dead and buried. All they'll do is they'll adapt as they're doing. They will invest. They'll make all the changes they need to make. And although we spoke about it earlier, the form and shape will change. And maybe some of the peripheral financial services things will fall away. But all in all, it's becoming an ecosystem where everyone just talks to each other. So it's actually a good thing that there's an 18-year-old in a garage inventing something new today, because we're just going to use this technology tomorrow, and we're going to get that leapfrog ability of that exponential growth by everybody using the last guy's invention of technology to take you ahead. So what Brett's doing with Zoona is going to enable someone else to do something even better.
Yeah.
It will give more legs to remittances across Africa. That'll change the world. The crowdfunding thing is really, in this part of the world, just getting started. And I can assure you there's some issues in terms of legislation around how we do peer-to-peer lending and how we do crowdfunding, because depending on who you ask, the Reserve Bank's the first one to say you're deposit taking, you're breaking some of those rules. And you know, that's why it's good that APS has invested in Rainford, because they couldn't have done it without you, because all in all they needed a banking partner. So to a large extent, it becomes a partnership, it becomes an ecosystem where we all better learn to work together and have a kind of partnership. I mean, I work very closely with Debt Busters, with Benay there. People that apply for credit in South Africa, to a large extent, 30% of people that apply for credit are overexposed. So immediately the guys are already in my environment. I've done a credit report on that customer. I've even done an affordability, and I've done a budget, an online budget assessment. I can tell that customer better than what he's spending than he can. Now I've got this information. What do I do? Sorry, you can't have credit. Go away. You're a horrible person. Or wait, let me help you manage your affairs. I'm going to pass the ball to Debt Busters, and these guys are going to help you rehabilitate your profile, get you back and make you creditworthy, and then hopefully they'll pass the ball back. And then when he's ready for credit, we'll give him credit. But that's the way the world works now. So what's the future for us? I mean, I think it's going to be, we better work with these regulators. We better convince them to play ball, excuse the pun. But more importantly, we better learn, especially in South African mentality, we kind of like to go into our little isolation mode. The guy next to you is a competitor. Don't share. Don't let him get ahead of you. But we must change that mindset to be more of a collaborative mindset, where we all work together and use each other's technology and each other's ideas and developments to sort of take us ahead. Anyway, that's my 10 cents.
I think it brings us to an interesting point in the evening, and I'm watching the clock over your shoulder. I've reached the 0 hour where all of you will turn into pumpkins, and that will be the end of my event. But I can promise that there will be another Fintech Africa community event, and we will, through you lot, bring some regulators to this table. And I think a little bit like the bank, they feel beaten up and attacked regularly. And how do you help them? How do you help them participate? In a collaborative way, and they're very powerful, and they can be detrimental if you don't find a way to work with them. So that we're going to do, and I look forward to it. Maybe we'll bring some UK regulators out, and they can tell us how they've got it right. That could be fun. Does anybody have any questions for this panel? I have a guest in Professor Mona Mostert, who is the director at Institute of Futures Research, and he was coming along this evening to be a curious onlooker and then just close for us and share his thoughts on what it takes to be future-proof, because it really is about how we think. And I'd like to give him a couple of minutes. Are there any questions for the panel? Anybody want to make a last comment? Benai?
Yeah, I'd like to add something that Dave mentioned to pick up. One of the biggest things that we find, at least, is the lack of financial literacy in individuals, particularly in Africa.
Yep.
And I think it's something that we haven't talked about today. It's an important topic that I think would require a lot of focus. And I would love to hear your thoughts on what are some of the efforts that you've seen are decent, what do you see our collective responsibility for this? Because if we don't provide people enough transparency and literacy, chances are we're going to hit a glass ceiling as we move forward. I'd love to hear your thoughts on that.
Can I make a suggestion that we have that conversation for those who want to stay and have a drink? I think it's a great topic, and I think it's something that all the institutions have to put their hands up and say, what part are we playing in educating a fairly large population with low literacy levels, forget financial literacy. So I'm going to suggest we take that out. Gentlemen, thank you for your time. We really appreciate it. Please give them a round of applause.